Good morning, traders. John Caruso coming to you here for March 24th with your currency outlook for today. First, we'll hit on some of the data that we saw this morning. We did see U.S. durable goods come in a little bit hot, up 1.7% month over month. The market was looking for 1.5%, so that's a better number. And if you look at U.S. durable goods from a year-over-year standpoint, right now we're up roughly 4.5% year-over-year. So that's a hot reading on durable goods from a year-over-year standpoint. The markets really aren't reacting too much to it. I think you have U.S. stocks moderately higher right now. Obviously, the monkey in the room here, or I'm sorry, the elephant in the room here is the healthcare bill. Will they pass it? Will they not pass it? Will they drag this through the weekend? So right now the markets are just kind of waiting for the House to vote on this bill. If I were a betting guy, I would guess that they are going to pass the bill here today. I am hearing that we might not have a vote until sometime between perhaps 1 o'clock and 3 o'clock, which puts us in the latter half of the day heading into the market close. So we'll know more on that to come. Switching over to the currencies here, the USD, we've seen a multi-day correction here. I am still very much bullish on a intermediate term and a longer term basis. Right now we're trading about 99.53, down about 30 points on the day. Perhaps you can contribute this near-term downside in the dollar to last week's Fed hike. We did see the hike, however, we did see some dovish language come out of the Fed as well. So the dollar really didn't like to hear that too much. However, I do believe that the U.S. data that's been coming in, the economic news has been running hot, and I do believe that's going to win out in the end. So still very much bullish on the U.S. dollar from a near-term, intermediate term, and a longer-term basis. Looking at the euro currency, we're trading 108.48, up 17 ticks versus the U.S. dollar here this morning. We did see a positive French GDP reading in the overnight, and we did see strong manufacturing data coming out of the rest of the Eurozone in the overnight. I do think we are near-term overbought on the euro currency versus the U.S. dollar, so keep that in mind. For those of you who have been watching for the past several weeks here, the British pound, from a longer-term standpoint, I did move bullish on the British pound at the end of last year. We are starting to see the economic data come out of Great Britain, very positive. And I believe once we get this Brexit situation behind us, which it looks like Brexit is a full, it's going to happen. There's no question about it. I think once we get that behind us, I do believe that could be a catalyst that allows the British pound to appreciate higher. We also did hear from a slightly hawkish Bank of England. They're now perhaps weighing the odds of a potential interest rate hike coming down the road, as a direct result of the strong data we've seen out of the UK. So moving on, and the British pound in the last 2 weeks, I think it's important, we are up 400 points within the last 2 weeks. So I do have it near-term overbought, so perhaps, it's it might be a good time to become bullish on a pullback. So we'll wait and see. Looking at the Japanese yen, I'm not a big fan of the yen after this multi-day rally that we've seen. We did hear from the Bank of Japan's Kuroda this morning, who is talking about pressing forward with stimulus over there. They're not going to be dialing that back anytime soon. So versus the U.S. dollar, still very much bearish on the Japanese yen here, both from an immediate standpoint and an intermediate standpoint until the fundamentals change over there. So anything else for me, feel free to reach out by email or phone anytime. Once again, I'm John Caruso. We'll see you here next time.